What's going on, guys? It's Killer back with a major market update here. Now we're going to be focusing on Bitcoin, primarily on the higher time frame today. Now the reason why I'm going to be focusing on the higher time frame, because I think Bitcoin is coming towards the end of the cycle. Now I'm going to be focusing on the confluences which I'm aligning with, and obviously this video isn't to scare anybody out of their own positions. This is just what I am seeing in regards to the market's positioning based off the patterns and the confluences slash metrics which I am using to validate my thesis. So most of you already know that we have our 4-year liquidity cycle. We have our 1-year bear market, and then we have our 3 years of a bull market, with fundamentally the halvings being an important factor. As we can see, the halving is a fundamentally bullish signal, and it has been the case since Bitcoin's creation here. Now, I just want to quickly measure the pivots between all-time high after the halving events. And if we start to look very closely in detail here, if we measure our first Bitcoin cycle from the first halving all the way to all-time high, we had a 335-day halving. If we do the same to the previous second halving to all-time high, we have a 487. If we do it to the third halving, we have a 518-day difference, and if we go to the current halving, the fourth halving, we are currently on day 518, as to see what we previously topped in the past. Now, a lot of people are skeptical, thinking, okay, well, we can see here that there's an increase in cycle length after the halving, and we can see this pattern recognition here, meaning that in theory, if we do follow through with this pattern, we could see Bitcoin rally 3 to 4 to even 5 weeks after this pivot point, which I have currently marked as the current all-time high, meaning that this could extend slightly. However, I want to look at some other metrics as well. If we start removing the halving events and look primarily at the date and time between the all-time high to all-time low, this was an example of an extended bear market. We had 426 days. If we start looking at the next one, we can see we had approximately a 365-day bear market. The next one, we can see we had a 365 bear market, mimicking the exact same cycle as the previous one in 2018. But you see, this is where things start to get interesting here. If you measure all-time low to all-time high, you have a 1066-day mark. If you do the same thing to our previous cycle from all-time low to all-time high, we see another 1065-day mark. Now, if we replicate and apply that to the current cycle we are seeing now, we can see we're on that 1060-day mark. Now, bear in mind, I am on the monthly chart, meaning that October isn't finished, and we could see a bigger impulse towards the upside based on the weekly or the daily chart. Because I'm on the monthly chart, we're not going to see most of the impulse in this candle, but based off this metric on the higher time frame, just purely marking from all-time low to all-time high, we can see statistically this has happened once, twice, and we are approaching that same period here. But you see, this is what's also interesting here. If we pay very close attention to where Bitcoin bottoms around, this is around January Q1. If we start looking at the next cycle, we can see December, January is where we formed that bottom. If we start looking at the next one, we had November, December, January. Around that Q4 to Q1 period, Bitcoin is always bottoming, meaning that the next Bitcoin bottom should statistically be around October 2026. Now, that doesn't leave us much time to continue to rally upwards. Based on the current patterns we are seeing here, after the all-time high, we have a 1-year bear market. We have a 1-year bear market, and based off this current metric, 1060 days, we can see that, well, we could in fact enter into a bear market here just based on the maths. But the reason why people are expecting a slightly extended cycle is because, like I said, you can see that after the halving events, the cycles are getting slightly longer. If we measure from the halving event to all-time high, we can see our previous one, 335 days. We do the same thing to the second one, 487, 518, and so forth. So the reason why people are believing this is going to be slightly longer is because of that metric. That doesn't mean it's time to be bullish around this price region. I'm speaking purely on the higher time frame here. This is statistically the period where Bitcoin is going to eventually topple out from. Now, another confluence which I am looking at here is if we start marking all-time high to all-time high. So if we start marking from here to here, we have a 1491 day difference. If we do the same thing to the next one, we can see we have a 1400 1,430 days, so a 2-month difference. If we copy and paste that over to the next all-time high, we can see we are at the 1,430 days. Bringing back the 4-year liquidity cycle, we can see we have 1,491, 1,431, 1,430. So we could extend to the upside for the next 1 to 2 months, but that doesn't mean this is a buying area. Statistically speaking, we are going to have this downwards momentum. Now, I want to quickly go over to a couple of other metrics which I'm observing here. If we start looking at days since last all-time high, you can see we are in this red territory, which we've seen in previous cycles. And as I've said, what this metric validates is how far we are away from price since creating a new all-time high. So considering we are at all-time high, this is why we are red, because we are breaking into new all-time highs. But if price continues to go towards a downtrend, what this is going to do is going to change the color for where Bitcoin is. And the color code is going to measure based on the days spent without creating a new all-time high. And going 400 days after not creating an all-time high, this is going to be a buying signal. However, from this perspective, we can see that red, we have our parabolic move. This isn't the buying area. Red, our parabolic move. Red, we are in this area. So statistically speaking, from a color code, we want to be buying around when we haven't created an all-time high within the 400-day region. Moving on to the Bitcoin halving progress. Now, this metric is measuring what happens after the halving based off the math and where we start toppling out from. We can see our first halving here. This is in 2010, so we're not going to observe this one because we can see here it was a slightly different dynamic. This was the birth of Bitcoin. If we start looking at our first halving here, we can see we had our impulse, we topped, had our bear market, impulse, topped, bear market, impulse, topped, bear market, impulse, and now we are coming to that crucial stage of the market where we are significantly overheated. Bitcoin has performed a 750% increase. It's rallied from a 300 billion market cap all the way to a 2.5 trillion. So we have had a sufficient bull market based off Bitcoin's performance. So taking a look at this metric based on the mathematics here, well, we can see we are not particularly in an area to be looking for long-term buys. If we start zooming in here, we can see off the previous one, we formed our high slightly after that pivot. Same thing with the previous one, slightly after, and we can see Bitcoin on the lower time frame here, we are still around this period, meaning we could go up another 10% from current price. Based off what's happened in the past where we top slightly after, the same thing could happen again. But like I've said, you don't want to be chasing the next 5, 10, 15% if we are likely going to experience drawdown next year of 30 to 40 to a 50% drop. So this is another metric which I'm observing on the higher time frame. Another thing I want to look at here is the Bitcoin long-term holder supply. Now, basically how this works is when we see a decline of this, it means people are scaling out of their bags. Once we see an incline, we can see long-term holders are accumulating. Now, if we start looking at what's happened every cycle, we see long-term holders selling and then buying back on the drop. Selling, buying back on the drop. Selling, buying back on the drop. And if we start looking at what Bitcoin has done so far here, we saw long-term holders decreasing, meaning they're selling and then they're buying on the drop. We can see they began selling again and then they began buying around this drop here. And now we can see that the long-term holders are eventually selling again. So what you're seeing here is similar patterns to what we've seen in the past, where during a bull market we see long-term holders selling their bags. Bigger players are in fact scaling out of the market based off of this metric as well. Moving on to the yearly candles, we can see we have 1, 2, 3. Again, I'm not going to include the first year because this was 2010. This was at the very start when Bitcoin was trading below $1. We're going to be looking at the most relevant. So we can see 1, 2, 3, bear market candle. 1, 2, 3, bear market candle. 1, 2, 3, bear market candle. 1, 2, 3. And obviously the next year, if we are following the same pattern here, which has happened 3 times already, well, then we're going to have a red candle next year where we're going to see that retracement, meaning buying anything around this region is not going to be a statistically good risk-reward ratio. And cycles can be different. They can extend a couple of months, but it doesn't mean it is a buying opportunity, particularly around this region, if you are looking for higher time frame investments. Now, if we start looking at this metric, which is analyzing and comparing previous cycles here, if we start zooming in, we can start comparing the 2021 cycle, the 2017 cycle, and we can go all the way back to the 2013 cycle. And if we start zooming out slightly, we can see that after this area, this is where we see a prolonged downtrend based off the previous 3 cycles. And we can see the previous halving, we had a slight rally after this event, a couple of weeks after, and then we had our bear market. We can see the 2017 one, we had an extension towards the upside, but eventually we went into a bear market, meaning that if we translate current price action to this, if we were going to mimic this price action, that would mean the Bitcoin cycle extends for the next 2 to 3 months. But the moral is here, we might see some upside movement, but based on the fractals here, we can see, well, we're going into a bear market. Based on the 2013 cycle, we actually topped beforehand and we pushed downwards around this period here instead towards the downside. So using this, we can see, well, it's happened once, it's happened twice, it's happened 3 times, and based on macro and fundamentals, well, that Bitcoin has rallied 750%, and we could see a similar pattern play out this time as well. So this is another thing which I am looking at. Lastly, I want to bring up a post which I posted on my social media on X regarding the DXY correlation with Bitcoin. Now, what people need to understand here is that inevitably the dollar will collapse, just like every single fiat currency. The reason why Bitcoin was created was the bailout for banks. The dollar will eventually collapse, but it's not going to happen overnight, and this is what people need to understand here, because Bitcoin is backed by the dollar, the treasuries. Based on this chart here, we can see we have a halving event. What do we see? We see Bitcoin increasing, we see the dollar stagnant. Well, in this case, we had a small drop as well, which sparked the next impulse. Once we saw the dollar regaining strength, we had a major push towards the upside, and notice what happened with Bitcoin. We had a push towards the downside, and this line which you are seeing here is M2 global liquidity as well. You saw a decline in liquidity, you saw the dollar increasing and risk assets decreasing. We saw the money printer on, we saw the dollar stable, and then we saw a major drop in the dollar the next halving event, money printing on, dollars decreasing, risk assets increasing. And what you're seeing here is a very similar pattern here. We see money printing, then we see a decline in money printing, risk assets drop because no new money coming into the market, and then you see the dollar increasing, which is weakening risk assets. Now we've had money printing, and now we are coming to that period again where we are likely going to see the money printer switch off, and we're likely going to see the dollar bounce. Now the dollar is on a 11-year trend line. Even if it does break below, we have another weekly confluence here where we have 1, 2, 3 points of contact where we could come down to here, and eventually we are going to have an impulse towards the upside. Now the dollar is going to eventually weaken over time. It doesn't mean it's going to drop in one straight line, and this is what people need to understand about the cycles, because eventually Bitcoin is going to decorrelate from previous cycles when the dollar does eventually collapse. But like I said, it's not going to happen overnight. So when the dollar starts getting into this price region, we can expect a reversal towards the upside. And naturally, this is going to make Bitcoin push towards the downside. We're going to see no money printing, the dollar increasing in value, and Bitcoin decreasing in value. This is just a simple macro viewpoint of how I'm observing the market from a macro standpoint as well. So these are the confluences which I'm looking at on the higher time frame. Hopefully you understand my thought process and why I'm positioning on the bearish side rather than the bullish side. I am currently holding no Bitcoin as we speak, and I do plan to rebuy in 2026 around Christmas. Until then, I hope this video has been informative and helped you understand where the current cycle is positioned based off of previous patterns. Again, the market can do whatever it wants. All I'm observing is patterns of the past, what's worked, where we are, looking at the macro image, and we can see, well, based off these patterns, we are coming towards the end. So thank you for listening, and I'll catch you guys later.